I'm speaking with William Breeze and Andrew McLean, partners of Herbert Smith Freehills. Firstly, Will, is innovation in funding the answer, and why?
I think it can be very useful, given the constraints on debt availability generally, with capital adequacy requirements and the like, and the fact that natural resource pricing has come down, the commodity supercycle is in a downturn. Say, for example, the iron ore price has come down to about a third of where it was only a few years ago. Yes, these innovative financing techniques can be extremely useful. For a company that can't raise conventional bank debt, it can look to specialist debt providers, a royalty provider, streaming financing, for example, to raise the funds it needs. In the case of prepayment structures, you have, again, specialist outfits that will provide a prepayment to a company, pay up front, and in return, that company doesn't need to generate cash itself. It simply delivers product. From the company's point of view, A, it's more available funding. B, it's generally much quicker funding. The specialist funding outfits tend to be able to move much more quickly than banks, for example. And C, from the corporate's point of view, the borrower's point of view, it's a smoother process. It's not having to sell a product necessarily and then raise debt or rather apply the funds it gets in repayment of debt, but it can simply deliver that product rather than having to go through the process of sale and obtaining the proceeds and passing those on to the financier. So yes, I think alternative financing solutions can be extremely useful in the current market. And for those borrowers who perhaps can't raise conventional debt or need to move a bit more quickly, yes, these solutions can be the real and practical solutions that they require.
Okay, and Andrew, can companies use these innovative financing alternatives alongside conventional debt?
Absolutely, yeah. Will touched on for certain companies it may be that some of these alternative forms of financing may be available where they might otherwise not be able to access traditional debt, but they can also be really useful if there is a funding gap, notwithstanding availability of some traditional bank or other traditional form of financing. So, for example, royalties and streaming products are really useful in that context because they can be set up in a way which sits alongside a classic project finance structure or something similar. We recently acted on a deal where there was mezzanine finance alongside senior debt in project finance, but the mezzanine lender also took a royalty stream, and that was just an additional source of funding up front for the company before it moved into development. So they can sometimes, if they can present intercreditor issues when they're used alongside traditional forms of funding, but they can usually be resolved, and there is good precedent in the market for how you get across those issues.
And finally, Will, do you see these financing techniques being used in other sectors?
In some cases, yes. So the prepayment structure we looked at earlier, for example, in oil and gas, yes, that works very effectively. We've seen it done a number of times, often on very large financings, hundreds of millions, even billions of dollars. That's great. When it comes to royalty or streaming arrangements, I think it's a bit more challenging, certainly in the oil and gas world. If you're doing an upstream financing, a reserve-based lending, for example, where the lenders will lend against the cash flows that are going to come out of the product that a borrower currently has in the ground, any attempt to put a streaming arrangement in place will cut directly across the cash flows available to the lenders. So the reserve-based lending providers, the RBL lenders, will not want to see a streaming arrangement in place. Now one can structure around this, of course, perhaps have a smaller RBL with streaming alongside it, potentially an option, although again the RBL lenders won't like this, or look to postpone the repayment under the streaming arrangement. So the RBL gets put in place, gets paid out at least in part, and potentially once that starts to amortize, there'll be cash flows available to start repaying the streaming structure, and you could try and run things that way. I think that a streaming structure, for example, will work better, or work at all, in fact, in mining, where, let's say you've got a conventional financing on copper, and often gold comes as a side product of that. And so you could do a streaming arrangement with respect to gold. And yes, that works. Thinking about it, I suppose one could try and do a conventional financing on oil product flows and then try and do some sort of streaming arrangement on gas. I think it would be challenging. Whether this can be done in practice, we've not yet seen it, but certainly wouldn't rule it out. I think, as mentioned before, borrowers are looking for new ways to access funding and to maximise the money that they can borrow against the assets they have. And so yes, trying to use streaming in the context of oil and gas could be an option.
Gentlemen, thank you very much for your time today.
Thank you.